What's going on, you guys? This is Brandon from Vegas, and welcome back to the Won't You Be My Neighbor podcast. This is where we give you guys practical real estate advice in an impractical world. As always, I'm here with my co-host, Mr. Bill Gaylord. How you doing today, sir? One day we'll get that correct. and as we started in December, we have our permanent co-host, the lovely, don't call her Alexandria. Miss Alexandria, how you doing today?
Good. How are you, Brandon? We're gonna get it.
Oh
Boom.
God.
See, look at that.
Bill,
Yeah.
high fives are your day.
This is like a Geico commercial where the black guy and the girl always get things right, and the old white guy just can't figure it out. Yeah, this is great. We're like a TV show. Guys, how was your New Year?
It's great.
Did you guys stay up to midnight, or did you guys do the whole like pass out at 9:30 thing?
What did you do?
I did not. I watched the ball drop for like the minute and was in bed 3 minutes after.
3 minutes after? I'm glad you made it. I
Yeah.
cheated and I watched New York's on
Yeah,
TikTok.
that's what I.
So
Well, that's what I meant.
Yeah, so I was 3
Nine.
hours.
Like, yeah.
9.
Go to bed at 9, watch it at
Yeah.
12. Yeah.
Yeah.
People are like, did you watch the ball drop? Yes,
Yep.
I did at 9 o'clock.
Yep.
I was done.
What
Bill,
about you, Bill?
You know, I kind of stayed at home, chilled out, had a nice dinner.
with your wife?
Yeah.
Oh, that was good.
Did she cook or did you cook?
You know, she normally cooks, so it was good. It was really good.
What'd she
Really good.
make?
It was a big pot roast.
Ooh,
Not a pot roast. It was a. Oh, I can't even remember.
Oh no,
Oh.
Bill. Oh no,
No.
Bill. Your
It's
wife
the-
is not
oh
gonna
my
like to
God.
hear that, man. I hope she's not watching right now because boy,
But
she is gonna be pissed.
honestly, it was pretty good.
It was pretty good.
Yeah.
And we have a special guest in today, so you guys can't see it, but our favorite special co-host Gracie is here today. She's on reprieve from her military leave, so we're gonna give a quick round of applause for Gracie. Yes, sir. Yes, sir. It's good to have you here. It's good to have you in the building. So, guys, what I wanted to talk about today is one of the most popular topics on our live real estate class is the FHA versus conventional loan, right? Because there's so much misinformation. Oh, conventional loan is only 20% down for investors. FHA is only for first-time home buyers. I want to clear up some of those misconceptions, some of those lies. In all of our videos, you guys see it. There's so many misconceptions people believe about how loans work. So I want to clean
And
up
who can buy?
and who can buy. And I want to clean up just a few of those misconceptions so people have a better idea and understanding of like what they're dealing with, right? So let's start with the FHA loan, right? We can either do round table or we could just go until we're out of things. What do you guys think? Round table or just rapid fire until we're out of things?
Rapid fire.
I like rapid fire. Just go.
Rapid fire? Okay, we'll start with you. Rapid fire. Tell people something about the FHA loan.
It's 3.5% down.
3.5% down. So a good number for this, I use $300,000. That's a safe number. If you're buying a $300,000 house, that's $10,500, right? Which means the bank is going to come up with about $289,000. That's a lot of money. If I called my mom right now and I was like, I need $289, she probably wouldn't give it to me, right? She'd probably ask me 20 questions
Right,
before she
why?
did it. Right.
Why do you need that?
So 3.5% is pretty low,
Versus a 20% down,
which is what $60,000 in that situation?
That's a lot of money.
which
Yeah.
is
A
a lot of time to save. And when you look at the time that it would take to save that amount of money
Sure.
versus putting down, $10,000, $11,000,
Sure.
you can do that, probably save that in a year, and then the equity in your home is increasing within the time that you would have taken to save the 60,000.
Yeah, I don't want to do. I want to save it for later. When we
okay.
do, no. You're actually on a good track because you reminded me of something. 20% down is awful, but I don't want to discuss it now. I want to save it for the end and explain to people why 20% isn't what it used to be. Right? All right, Bill. Rapid fire. FHA loan.
Mortgage insurance premium lower.
What the hell is mortgage insurance premium? I heard about PMI. What is mortgage insurance premium?
So FHA has mortgage insurance premium versus a conventional loan that has private mortgage insurance.
Okay.
It's just mortgage insurance. And
What's the
so
difference other than the name?
the difference is that there's upfront mortgage insurance that's added to the loan, and then there's monthly mortgage insurance that's part of your monthly payment month after month.
And does
FHA lowered the mortgage insurance premium
Okay.
back in May by about 0.3%, which is a big deal, and it's made FHA just a huge product.
It helps
after
big
that.
time, right?
Huge.
Does
huge.
does mortgage insurance premium drop off at 20% the same way PMI does?
No.
No.
If you put 3.5% down, you're going to pay mortgage insurance premium the whole lifetime
In perpetuity.
in perpetuity.
Until you'd refi, if you want to refi.
If you put 10% down, it will go away after 11 years.
Okay.
The goal, if you're doing an FHA, put 3.5% down, buy the house, let the house appreciate in value, and then refinance into a conventional loan, remove mortgage insurance completely.
Look at this guy skipping ahead to the B block, man. We're going to go over that.
We're doing rapid fire.
We're going to go over that in detail of how to flip the FHA. As a matter of fact, that might be its own podcast of flipping the FHA loan, because that's a big one, right? Okay, big thing about FHA loan, guys, lower credit and debt standards. Just being real with you. The reason most of you guys don't get qualified for a loan is your debt. You guys are really good at making money, but then you guys treat it like you hate it and you spend the money like crazy, right? So your debt to income is off. The FHA allows a significantly higher debt to income. We've seen up to 50% debt to income.
I've seen over 50.
Right? Now, that's not normal. I'm not telling you guys.
All financial profile.
Yes, 100%. I'm not telling you guys that you can have more than 50% debt. You want to be in like the 41% range. But FHA allows you to go significantly higher, which means more people can qualify. All right, next. So we've covered debt, we've covered down payment, we've covered mortgage insurance premium. What you got for me?
It can be gifted. Your down payment can be gifted.
Your down payment can be, how much of it can be gifted? Is there
All
a
of it.
limit? All of it. So your down payment on an FHA loan can be gifted. That's huge.
That's huge.
That's
because
huge.
again, back to saving that $10,000 or whatever it is you need to save, that can be gifted from a parent. It can be gifted from a loved one. It can be gifted from a fiance.
Yep.
It can be gifted, and opposed to, because typically you have to qualify. You have to show that you have the income in order to purchase a home. But you can say, hey, my mom, my dad, my fiance, my best friend from high school is going to gift me this money.
Yes. All right, FHA loan. The money can be gifted, 3.5% down payment, higher debt to income ratio. What you got?
Lower interest rate.
Lower
Interest rate than a conventional mortgage.
A lot of people don't know that. So
They don't.
what's the current conventional interest rate versus the current FHA interest rate?
So the difference between the two is about 0.5%.
Okay.
So FHA is about 0.5% lower now in interest rate than a conventional mortgage.
See, most people think it's the opposite. When I do the polling on the class every day, most people think conventional. They're like, oh, well, I'm going to go conventional because I'll have a cheaper interest rate than putting 3.5% down. And that's just not true.
No.
Right? So if you're telling me if I use FHA, not only do I have a 3.5% down payment, but I also have a lower interest rate than conventional.
Correct.
Right? So it seems like it's beneficial for people who are maybe struggling or buying their first home or in a less fair financial position.
Well, it gives them the opportunity to basically get into a home for not as much money.
Okay.
And then with a person like you, the negotiator of the world, you could potentially get them to pay seller closing costs.
That's what we aim for right there.
Yep.
My big FHA thing, and this is something that all of you need to know, it is a primary residence loan. This has a big pro and a big con. The big con is you gotta live in the house or your bills must be sent there, right? But there's a catch. There's a catch because the real estate world was not prepared for this modern Zoom world where people work from home. You say it has to be my primary residence. Well, if I work from home or if I work remotely, my primary residence can be wherever I'm gainfully employed, right? This is why you have people who may not live in a certain place, but they're gainfully employed there. They work remotely. If you're a traveling nurse and I work in 3 different states, my primary residence can be where I'm gainfully employed, right?
Yes.
And real estate still hasn't caught up to this little loophole where, oh, I worked this year in Chicago, Las Vegas, and New York. I think I'm going to have my primary residence wherever the real estate is cheapest. Little loophole, little fun thing. People
I
need to
wonder
take
how long
advantage
that'll
of.
stay.
The real estate world is so busy dealing with commissions and all that stuff. They haven't even begun focusing on where people live and how they can exploit the loopholes. Honestly, it's going to be around for a while. We are a slow corporation.
Yeah. But the other thing that I want to point out, Brandon, is that you talked about credit earlier. Sometimes you can have a little bit less credit FICO score on an FHA. But the reason why that loan is so good right now is if you try to get a conventional mortgage with a low FICO, that mortgage insurance premium is like huge. I mean, I've seen it at 1.7% for a low FICO score and a higher interest rate. So FHA has become just a great product.
Well, if FHA is offering lower down payment, lower interest rate, why would someone go conventional? What are some of the benefits that conventional offers?
Caught me off guard here because I was thinking about my next FHA one. I was getting
Keep it
You,
rolling.
wait, you had more FHA?
Well, I want to ask Bill on this one. How many units can you have? Can you have up to 4?
4 units.
So multifamily.
That's a good one.
I
that's a
wanted to
good
bring
one.
that one up because let's say you buy a home that is a duplex, triplex, fourplex, you can live in one of the units and rent out the other 2, 3, or whatever that is. So basically somebody else is paying your mortgage.
That is 100% one of my favorite little real estate hacks. And write that down in our mental note. Let Alexandria talk about FHA multiplex. I think a whole multifamily episode would be great for a lot of future investors or people who just want to do the little house hack.
Everybody's looking at that.
Yeah.
Everybody's trying to buy investment property. Everybody's trying to get out there, and that's a great way to do it.
Yeah.
To start your portfolio.
And what's interesting is this might be something that you're not aware of. And there's little pocket neighborhoods that all of a sudden you'll go and you're like, wait, I didn't realize this neighborhood had, something in the back, or there's a lot of carriage houses, or, other things that we didn't necessarily realize. And there's a lot of different neighborhood pockets that you should look at to see this, to find this.
Agreed. It gets you searching. It gets you searching into new areas, which I think is beneficial.
And beginning to use your mind to say, oh, this is an opportunity for me to make money here. Opposed to, well, let me wait 3 years to save 60,000, 100,000, whatever it is. Sure. I get this gifted. I can buy a duplex. I rent it out to somebody, and my mortgage is paid. I'm making money.
I think it makes no sense for parents. Really, I think it makes no sense for parents to get so excited to buy their kids a new car when they could just gift them that money as a down payment on a duplex and teach their kids the value of home ownership and get them a little asset earning business on the side.
Yeah.
Because if you're a college kid or if you're someone in your young 20s and you buy a duplex or a triplex or even a 2-bedroom condo, rent out the other unit, you're probably going to start making profit on that sooner than later.
I was looking at shoes the other day and I asked the price.
What kind of shoes?
They were beautiful.
Beautiful shoes. Yeah, that's what you want to go
They're
with.
beautiful. And the gentleman helping me, he goes, oh, we just had a price increase. And I said, oh, what does that mean for shoes? Like, I've never heard of this. Right. And he said, yeah, we just increased the price of the shoes. And I said, well, what's the cost of this shoe? He said, $3,500.
You could use that to buy a house.
And I said, that's a down payment on a house.
That's a down payment on a condo.
Well, not my house. And I'm like, well, I don't think you understand. You could do FHA. You could do 3.5% down. Then you get the other half gifted.
Yeah.
And
you're there.
Instead of walking, you're living.
There are women. So my girl's into the luxury purse thing, right? So I know what you're talking about. And I didn't realize how expensive these bags were until I started, going in and shopping with her. They're down payments. And now I see girls with these luxury bags who are renting apartments telling me that they can't afford the down payment. And I'm like, you're wearing the down payment on your shoulder right now.
Instead of somebody gifting you that bag, have that person gift you a down payment for an FHA.
Ladies, if you have a sugar, turn the TikTok camera on. Ladies, if you have a sugar daddy, don't ask him to buy you a bag or a purse. Ask him to put a down payment on a condo for you.
There you go.
That way, when you end the relationship, you have an asset that keeps making money. Exactly. Just make sure you put the condo in your name. This is Las Vegas. Don't let them hustle you.
That bag is not going to go up. It's only going to go down.
Your bag does not gain equity the way a condo will.
No, all right, it does not. Unless maybe you look at diamonds. Diamonds can go up. But I would say if you're going to get anything in the multiple thousands in a gift, get it gifted for a condo.
100%. I think that's beautiful. See,
that is my tip of the day.
This is why I need you, because now we can dip into Vegas real estate tips.
That is Vegas tip. That is a total Vegas tip.
These tips apply in Vegas, Miami, and Los Angeles.
Right.
Oh my gosh.
So
you've got Brandon totally off guard
right
now. He's like off his game right now.
Well, I like that. No, I like that you dipped into the luck because it's a lot of my real estate classes focus towards women. That's literally why I started teaching the class, because they've been taught to put their money into these non-appreciating assets like bags and all these jewelry, things like that. And I'm like, if you would just put that money into a house, I swear to God, you can loan against the house to buy more shoes. Right? If your house has $100,000 in equity, girl, go on a shopping spree like your heart desires. Buy all the shoes you want, but get the house first.
Yeah.
It's like talking women out of expensive purses and shoes is like talking guys out of new cars. It's like, dude, get the house. Then you
get the car.
You can get all the car stuff you want, dude. You're fine.
Yeah. Wait a year for the appreciation to go up and then go.
Yeah.
Wait. It is like Restraint.
I've seen a lot of people buy cars.
I had a great friend that worked with me years and years ago. He was from New York and he had these big glasses at the time. And he would look down at the sheet and he'd look up at the person and said, "You're driving your house." And it was because they'd buy their car first and they didn't have money and they couldn't afford the payment on the house.
Yeah,
So it's
100%.
like you're driving your house.
What are
So
those
don't do
fancy?
it.
What are those fancy black cars? The Hellcats. The Hellcats. Y'all ever seen those? They're like the
No.
big fancy they're like Charger looking cars. Dudes are out here paying like 80, 90,000 for that, and I'm like, bro, you're driving that to an apartment complex.
Right.
Like,
Right.
like, bro, what? The $80,000 is 20% down on a $400,000 home. Like, bro, you bought that instead of an investment property.
Right. Oh, you go around these luxury apartments here in Las Vegas and you'll see people driving Maseratis. And it's like, again, why are you putting your money into this Maserati? Or why are you buying the pair of shoes that are $3,500? I can maybe understand a handbag, $3,500, but a pair of shoes
Right?
for $3,500, put that into your home.
We actually just got we're rolling with the TikTok camera live for YouTube, right? We're multifaceted. And I want to incorporate a little segment
Yeah.
for what I think is the best question. I've been looking at the screen.
Does someone want to know
Have
what
you?
the shoes were?
Well, no.
Just
well,
kidding.
That would have Louis Vuittons?
No, they
Oh.
were Chanel.
It's always Chanel.
Yeah.
This person said, her name is Kitty Bits. She's one of my longtime
Okay.
watchers on live, right? She's from Massachusetts, and she says, my addiction is home decor shopping. Put myself on Amazon budget to keep myself in check. This is a true story about Amazon. Quick aside. I found out that girls have a wish list on the Amazon of like hundreds of items. Hundreds of items.
I do.
You know, oh.
Don't
You
tell
do
my
too?
husband. Don't tell my husband.
I will
Wow.
not
Yeah.
tell your husband.
Wow,
That
don't.
freaked me out. And I'm like, wait, you have a wish list of items that you're looking to purchase in the future? Oh, my mind is blown. How can y'all ever save money? Oh my God. Okay.
It's so easy to spend money.
It
It
is
is so
so-
easy.
Especially
They
now.
make it so easy. You know, put it in the cart and just check out. Let's go.
You know, something
it's
that
hard.
might help for that to save money is tell yourself, I'm only going to pay cash and carry cash. Don't use a debit card. Don't use a credit card. And I find that if I have large bills, so if I have hundreds, I don't want to break it.
Yeah.
I don't want to break that
Yeah.
to smaller. And that's been a trick I've used in the past of like, oh, I have I have 100 in here. I don't want to break
better
it.
not
I don't
spend it.
I don't need to get that soda.
That's good advice for people who don't like to overtip strippers. The problem is the more money I have, the more money I seem to give away to people. It's unbelievable. No, I'm a 20% tipper guy, and like if I have cash in my pocket, like an extra like $6, I'll just like, oh, well, here, you take it, right?
So do you tip on the tax or do you tip on the so when you
That's
get
a
your
good
bill?
question.
I always tip on the total, not the wait. I tip with I subtract the tax.
Oh, not me. Whatever that final number
Whatever
is.
the
No.
final
I
number is.
subtract the tax.
I'm 20% on the full
Yeah.
amount.
See, I don't. I tip on the amount, and then I don't. I
Yeah,
subtract
see,
the
people in the chat are saying they tip on the percentage too. I'm with like a lot of people are with you. I'm a Vegas kid. I'm
Yeah.
weird on that. Okay, before I forget, because we have too much fun. Conventional loans. We said enough about the FHA loan that it's like, why would anybody go conventional? The obvious one is, okay, FHA has loan limits, right? For comparison, in San Francisco, you can get $1.1 million on an FHA loan. But anybody in San Francisco or Los Angeles can tell you that doesn't buy a crack house, right? You can't even buy a crack house. You can't buy it's hard being a drug dealer in Los Angeles because trap houses cost $1 million. Like the bar for drug dealing has raised because of the housing limits, right? In Las Vegas, it's $500,000, right?
For
And in
FHA.
Vegas, $500,000 can get you pretty much anywhere but Summerlin.
It's a lot.
Anywhere but
I
Summerlin.
mean, 500,000 here.
Yeah.
And then, with the down payment, 3.5, it's a little bit over 500,000.
Sure.
For
So
the home price.
if you're in
It's
Las
good.
Vegas and you want to buy a $600,000 house, $700,000 house, conventional is probably more for you
You have
because
to,
you're going way above those loan limits, right?
Yep. Yep.
Like unless you want to take $200,000 and put it on top of your FHA, but that doesn't even make sense at that
No,
point.
why would you do an FHA
Why-
at that point?
why would you
But
do FHA?
If you're moving from California and you've sold your home, or if you're downsizing and you have that cash,
Mm-hmm.
then you can, put a large percent down. You're not worried about your limits there, and you go conventional. One of the things, though, that you were asking originally, there's no PMI
For 20% down.
for 20% down
Yeah.
for
Yeah.
conventional.
Yeah.
And that's a benefit of it. That's
Yeah.
a true benefit.
It's a controllable loan. It's your own loan. It's not government owned. It's not government financed. It's you based off your credit, debt to income, right? There's no government interference.
The real key on the conventional mortgage is credit score. Right now, if you don't have a good credit score, FHA is the way to go. if
So
you
what would you
do
tell
have a
people
good credit score.
What would you tell people a good credit score is?
Good credit score, in my opinion, for conventional is going to be about 740 and above.
740 and about. See, I like that you're honest, because on social media, on YouTube, you'll see so many lenders telling people the bare minimum because they just want their money. Oh, if you have a 500 credit score, we'll qualify you. We're not going to mention that you have to put $1 million down and you're going to get a shitty rate, right?
And your firstborn child in your left toe.
Right, 100%.
Right.
And I appreciate, that's why there's a reason we're partners, right? It's because you're honest with people. If your credit score is coming in under 740, go FHA. I mean, honestly, just save yourself the money. Just save yourself the money.
It's worth it looking at it, but conventional is so much more FICO based in terms of interest rates. There's adjustments that you kind of don't see behind the scenes.
Yeah.
They're just higher.
Yeah.
If you have a lower FICO score, boom, you get basically dinged on your interest rate.
And I
FHA is not so much.
I want to chime in on this because people may be thinking like, gosh, there's so many restrictions and how do I figure it out? And do I want FHA or do I want conventional or how do I want to go with this? And these guidelines are put into place for your protection. Up until 2008, anybody could buy a house. You had dogs buying house.
Yep.
As long as you had a heart beating,
Yep.
you people were buying multiple houses. And that's where the crash happened. So remember, this is to make sure that you can afford the home. It's not you saying, well, I got it, I got cash right now. No, they want to make sure and they want to ensure that you can sustain. We don't have to evict you. We don't have to foreclose on you. So it's really important to understand that these are put into place to ensure our economy goes well and everything, and that's why you really want to speak to people like Brandon, like Bill, to understand where you qualify.
We are at a no-win situation. Dude, what she just said is so true, and it puts us in a no-win situation because it turns us into your parent. When people were ripping you guys off and taking your money and giving you loans you couldn't afford, you got pissed. Oh, they caused the market crash. Okay. And then when me and Bill tell you, hey, we're trying to protect you from yourself. You can't really afford this house. Oh, these asshole realtors keeping us from buying a home. It's like, dude, we can't win for losing, right? Like if we sell you something you can't afford, we're ripping you off. And then if we try to help you and protect you from your own bad decisions, now we're, bad dad, It's
Right.
Sad. I have a question for you, Brennan. Out there in the marketplace right now, there's a lot of people that are saying it's just absolutely unaffordable to buy a home. Can't disagree with that. But what do you say for people who are saying that it's not affordable to buy a home? Should they rent? Should they buy?
I'm going to tell
Should
them
they wait?
I'm going to tell them what hot girls on TikTok say. If you wanted to, you would. I had a 23-year-old kid who worked at Meineke buy a brand new condo for me for $320,000. That's worth $380,000 a year later. He wasn't rich. He wasn't rich. He wasn't working some fancy tech job. He was a normal, everyday, blue-collar worker, 23 years old. He didn't have a silver spoon in his mouth. He just wanted to. He saved for a year. He eliminated his debt. He built his credit. He was 23 years old, and he was more financially responsible than most of the adults I meet. If you wanted to, you would. Houses are only unaffordable because people decide that they have money to spend elsewhere. I have a whole list. In fact, next week, we're going to put the list on the board of where the average person spends their money. $100 a month at Starbucks. How much money on Target? How much money on Amazon? How much to go out drinking, smoking, partying, hanging out with your friends, shoes, traveling, buying new cameras, upgrading your phone, right? Like, how many luxuries do people think are normal that they just value over owning a home? That's true. People would rather pay a Netflix subscription than save money to buy a home. And these things start to add up. Yeah. So I disagree. I don't think houses are affordable. I think they're affordable if you think home ownership is valuable.
Yeah. We've got a living proof over here in regards to making changes in life to sacrifice to get to that level of doing it. And if you're not willing to sacrifice some things, maybe home ownership is not the right thing.
Real estate is no different than anything else in the world. If you're not willing to sacrifice and put in the work for long-term gain, you're just going to keep getting short-term resolutions.
Yeah.
That's it. And that's why people end up renting, because it's a short-term resolution that just allows them to live with their conveniences.
It's a mindset.
It's a mindset. People get mad at me. I don't care. I don't care. People can say whatever they want to. I grew up homeless. You're not going to lecture me about the value of home ownership when I didn't have a home, right? Like, I don't take anything these people say seriously because, truthfully, I know more about being broke than most of the people watching me. And I'm telling you, it's a mindset. Home ownership is affordable if you value it. If you value drinking with your friends, trying to pull random Tinder girls, traveling to places that you can't really afford but make you feel special temporarily, what you're doing is buying Vegas. Vegas sells you temporary happiness at an elevated cost. We make you feel luxurious for a week, and we take all of your money to do so. And I think most people are living the Vegas life. They'd rather have temporary luxury than long-term satisfaction.
So how do they get that mindset? What will bring them to that mindset? Watch
me every single day on TikTok Live as I lecture you like the dad that you never had. All right? That's what I do for a living. I'm not even a real estate salesman anymore. I'm a real estate coach and motivator. I sit there like your dad and lecture you for an hour on save money, stop buying Starbucks, stop spending so much money on phone apps and Netflix. That's all I do. And the people who listen are in houses, and the people who don't tell me that houses are too expensive. It's the same thing.
It is so fun for me to work with your clients and hear them say, I love Brandon. He showed me the way. I'm saving money. I want to buy a house. And you're definitely impacting those people.
This is the true story. It's an absolute true story. 4 years ago, one of my first friend clients, somebody who was a friend of mine who turned to a client. He's 22 years old. I worked with him at the dispensary a while back, right? He was a former veteran, and he was like, Brandon, I just really want to do this. I really want to get in a home. All my friends are partying and doing, I'm not into that kind of stuff. I don't really care about that. I want a home. We worked with him for 6 months, put him in a home over there right outside of Summerlin for like $425,000. Today, I checked on the equity of his home because he called me. His home is worth damn near $600,000. He's in his mid-20s. He has about $200,000 in equity sitting in his home, and he's in his mid-20s. So don't tell me, he worked in a dispensary. Don't tell me that homes are unaffordable.
And
right?
did he use a VA loan?
He did use a VA loan. He did use a VA loan, right?
Which is perfect.
He could have gone conventional. He had worked hard enough to save up the down payment, you know? It's because he wanted to. He wanted to. And that's it. People don't want to take the responsibility. They don't want to hear me say this. It's no different why people want to blame anything else. They want to blame Biden or Trump or whoever. They're looking for somebody to blame on. Truthfully, houses are unaffordable because you decide that you can't afford them.
Yeah. And the nice thing about Las Vegas is that you can afford a home in a nice area. You know, coming from California, you go, oh, $300,000. I don't know if you really want to live there.
No.
I don't know if it'd be safe.
No, the junkies would kick you out of the neighborhood. Talking about broke boy.
Right.
$300,000, you broke.
That's the nice thing about Las Vegas is you can afford a home. You can afford a lifestyle. You can afford it.
Well, and I look at Robert, 2 years ago, bought a house, little over $300,000 and $311,000 in a gated community.
In a gated community. Yeah.
And FHA.
That's what I'm saying.
It's got a pool next to his property or in the neighborhood, community pool, gated community. Beautiful. And it's gone up tremendously in value
100%.
too.
At the end of the day, FHA, conventional, it doesn't matter. Really, it doesn't. That's the point of the story. Whether you go FHA or conventional, it doesn't matter. Whatever you choose to stop renting to get out of the current mentality and mindset that you're in, that's the important part. If you want to go FHA because it's easier, go FHA. If you have the money to go conventional, go conventional. Anything, literally anything.
To get you into that home.
To get you that home.
And they don't have to decide on, I want to go FHA, I want to go conventional. That's what I do.
Yeah.
That's what we do, a side-by-side comparison to figure out which one is the best program for you.
For you.
And for you. And there's a program out there now in certain areas, 3% down, no mortgage insurance. That is a conventional loan.
That's
up
wild.
to what amount?
Up to conforming loan amount.
Wait, hold on. Turn the TikTok camera on, Robert. This is the good one. Wait, what did you say about a 3% conventional loan?
It's called the Home Run, and it's a 3% down, no mortgage insurance, and it's a conventional mortgage. It doesn't have to be a first-time home buyer. It's a great program out there now, and they can qualify, and it has to be in a certain census tract, but it's a great program.
Wow.
There's a 3% loan with no PMI?
3% down, no PMI, great interest rates, not have to be a first-time home buyer, no income limits.
What's the credit to you?
It's 680, I believe.
So if you have a 680 credit score, you can get a great loan with no PMI.
Yes.
And how would someone apply for this loan?
they would go to this number here, billgaylor.com.
Right here?
And we would go ahead and just go through, get the application done.
Wait,
And then you would work with Brandon, find the house in a particular census tract that it qualifies for, buy a home.
Does it cost any money to contact you?
No, it doesn't actually.
So wait,
it's free.
The loan has no PMI.
No PMI.
You can apply for it for free.
Free.
I can call you for free.
Free.
I'm free.
Free.
So it sounds like
You're going to make money on this.
It sounds like if someone wait. It sounds like if someone wanted to own a home, if they genuinely wanted to own a home, they could, right?
Yeah.
Home ownership is affordable if you think it's affordable. If you don't think it's affordable, then it's not.
And I want to say this. It's not that difficult. It's not that there's 3 things you have to do: credit, income, and assets. If you have good credit or you work on your credit, make that work. Income, make sure your income is there, not a lot of debt. And then you have assets, which is basically a fancy word for money for down payment. 3% down with no PMI, no mortgage insurance. That's not bad.
Closing words. What you got for us? Animal
Well,
fact of the day.
I
Animal
was
fact
going
of the
to
day.
chime in with my animal fact.
What you got?
So I want to talk about nesting. We've talked about it in the past, but the importance of finding a home that works for you is really the importance here. So speaking of the bald eagle.
Oh.
Ooh, yeah. So their nests are 5 feet wide, 4 feet deep.
Okay.
It's pretty big. They actually remodel every year. They come back. Yeah. So they nest.
It's like
the
spring
average,
cleaning?
Well, I don't know what season they do this in.
Yeah, okay.
But they lay their eggs. They take about 35 weeks to hatch. And
35
then
weeks.
Uh-huh.
That's
Oh,
a
sorry,
lot.
35 days. I'm
Oh, I
sorry.
was
I'm
gonna say,
sorry.
Oh my God.
35 days, a month.
That's a lot.
Takes about, yeah, that's a lot. Thank you for calling me on that. About a month in order to hatch another baby bald eagle. And the family will return. The mom and dad return every year, and they continue to make adjustments. Maybe they need a little bit, wider, deeper, and they come back to their nest every year. So this is important for us to think of with our home, right?
If it's good enough for bald eagles, it's good
Yeah.
enough for us, right?
So yeah, you can come back to your home and remodel it. If you're like, hey, my family has changed, you may want to remodel. What are you doing here?
Speaking of bald eagles.
Oh, look at me. But I also learned
didn't.
it is illegal to remove a bald eagle's nest.
Yeah, they're our national animal.
But a nest, you can't.
That's how bald eagles say I love you.
Yeah.
Yeah.
There we go.
The bald eagle right here.
There we go.
Yeah,
Do you have a stat of the day for us?
Stat of the day. Gosh, I don't have a stat of the day, but I should have.
I have a stat of the day.
I messed up.
I have a
totally
stat of the
messed
day.
up on this one.
I have a stat of the day. Are you ready? Are you ready? Stat of the day. Stat of the day. People focus so much on what houses cost, they never learn what houses make. From 2019 to 2023, the average American made $180,000 in equity on their home. That's in 4 years.
4 years.
And this, my friends, is why 20% down is no longer what it used to be. By the time it takes you to save 20%, the house will have become so much more expensive that your 20% no longer even qualifies. So you say, oh, I need to save up $60,000 to get this house. Great. By the time you save $60,000, you're going to need $80,000. By the time you save $80,000, you're going to need $100,000. And you're never going to catch up. Stop waiting for 20%. Loans are as low as 3.5%. You can refinance them down the road, as Bill told you guys earlier. Stop waiting to get what you want, you guys. All right? I'm Brandon from Vegas. This is Bill. We're going to get this. Oh, we got it right finally.
Got it. Alexandra.
Don't call her Alexandria.
No.
Come and be my neighbor, guys. Thank you.
Bye, everybody.